Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're looking at here is a chart of the Mini Russell 2000 futures contract. And as you can see, what was interesting is we've mentioned in the last video, I believe it was Monday, today's Thursday, the 10th of May, 2018. And we had mentioned in the S&P right here that the market was kind of discretionarily bearish. We had these descending highs. Now we did have some ascending lows, but it just seemed like the bears were more prominent. Now, of course, this is the S&P 500. If you look at the Russell 2000, it actually looked a little more bullish. This is actually kind of an ascending wedge, at the very least a pennant formation, if not an ascending wedge. So what's interesting is this has actually led the market higher, and we actually see the Russell looking to break out of the pennant formation, of the triangle formation. Of course, this is the same volatility that we had mentioned was constricting, and we're likely to get an explosive move. Wow, have we gotten an explosive move. I hope you guys have been able to take advantage of the long exposure. If you were a client of the MiniAnalyst.com, you certainly would have been able to take advantage of this huge move higher. As we look at our current exposure, looking pretty good. $23,160, $72.50. S&P System 1.0 sitting on a $3,000 gain. The Doubler sitting on a $500 gain. The Boost has two contracts. Now, we had mentioned, we're going to look at this in a second, we had mentioned the Boost was a phenomenal time to get involved. The Boost had a maximum drawdown of about $38,000, but you're making $500,000 over a decade or so. All purely hypothetical. We always have to talk about that. Over a decade or so, $470,000, $38,000 maximum drawdown. What have we gotten? Very close to one of the historical drawdowns. In fact, we can go ahead and look at it right here. So if we look at the Boost, here's the Boost. If we go and look at the average, or the largest drawdowns, $38,000 was the largest drawdown in 2016. As mentioned, definitely remember that. It was painful. The most recent drawdown, the third largest drawdown, just occurred on May 1st. Now, of course, this was just updated, I think, before these latest trades on May 1st, and 32,000 was the maximum drawdown that we had experienced. So what have we mentioned several times? In fact, we can go ahead and just look at the Boost. We'll go ahead and pull up the strategy report. We'll go ahead and look at the graph. We had mentioned this drawdown right here. Pull that together. Beautiful drawdown. Drawdown green, drawdown green, drawdown green, drawdown. This was a $30,000 drawdown, the $32,000 drawdown that we'd experienced, and lo and behold, what do we have? But $15,000 almost, we'll say $14,000 in gains on just two contracts. Of course, as a client of the MiniAnalyst.com, you certainly would have been able to participate in that. We mentioned what a wonderful time it was to get started, and here it is, off to a great start. MASE sitting on a $6,280 gain for just one contract. So that's kind of how things are going. On a MADSC has not traded. This was, if we can go ahead and look at the time again on the S&P. We'll go ahead and minimize that, maximize that. This corner was just a little too choppy. I mean, we had all these great buying opportunities as we came down to 2,600-ish or so, and there was another discretionary buying opportunity, bull among bears right there. It was just a little too choppy. We didn't really know, and particularly with these descending highs, it kind of looked like it was a 60-40 split between the bears and the bulls. 60 bulls or bears, 40% bulls. And of course, the be-all end-all of trend following significance in the 200 SMAs and EMAs right around 2620 definitely gave, I guess, a little more weight to the 40% chart formation that would ordinarily favor the bears by 60 or by 20 points. So we've gotten this. Now, what do we do now? We've gotten the blast higher. Now, of course, the firm, as mentioned in the intro, the market has remained officially bullish, or the firm's market bias is officially bullish, has been since 2585 on the 3rd of April. But what's happening here is we're right back into this former massive level of resistance that we called right here when we were a bear among the bulls, as the market appeared to be blasting higher. We got the retest, we got another retest, we're now back in there. So not only have we had multiple and significant retests of the horizontal significance of support, but we've actually gotten a move back off of the be-all end-all trend following significance in the 200s. So this makes this massive level of resistance less significant. So we can't really call this a massive level of resistance at this point, particularly when you don't when you've just gotten a break higher of all key measures of trend following significance. That occurred there, but it wasn't confirmed. Now we've gotten two very nice, what'll actually be today a very likely higher close into this zone. Now, are we discretionarily bullish? No, definitely not. We would wait for a pullback on the intermediate term. Are we officially bullish? Yes. Are we looking for a bearish scenario? No. No longer looking for a move to 2400. Again, we mentioned that we wanted the market to dictate. And so there you go. So that's just on a kind of a discretionary basis. That's MADSC DT. But what's significant is the systems. There you go. So if you're interested in becoming a client to the with the MiniAnalyst.com, you can have these trades delivered to you. You can have these trades delivered to your cell phone, to your email. You can have these trades delivered to your broker. You can have these trades auto-traded. So hope you've enjoyed the quick look at the market. Actually, before we go, let's take a look at the intraday dynamics. Bullish, very nice. This is an absolutely beautiful bull trend. In fact, we've not even gotten a pullback to the trend here. Very interesting. We got some pullbacks yesterday, and just kind of a shallow. It's definitely a bullish scenario. So everything looks bullish. Wait for a pullback. Everything looks great. Hope you guys are having a great day, great week. And again, if you have any questions, go to the website. Shoot us an email to admin@MiniAnalyst.com. You can go to the website, chat with the support team live. And actually, we're going to go ahead and I've signed off maybe twice now. So we're going to go ahead and take a look at the website. So we've updated our performance C's. For the portfolios, there's the MA Platinum. You can get started with $100,000. MADSC $25,000. MADSC just $5,000, just for the MADSC DT. So you can go down to the portfolios, and you can look at any of the portfolios, and you can see the actual updated performances. We've actually updated the performances. So the Marty, this is of I guess this is of the 3rd through the 3rd, was the last trade for the Marty. Kind of struggling a little bit for the Marty, but again, very likely to get some all greens going ahead. We've updated the, let's see, HW, the Select, System 1.0. Wow, this is absolutely amazing. Again, unchanged system for 15 years since it was developed, I think, in 2002. And just absolutely unbelievable. The Doubler continues to make new highs. Main, new highs. Let's see, what do you have? Mace going right here. This actually doesn't count the, what was it? I believe it was a $6,000 gain for the Mace. So we're sitting right at 185,000. So this will be 191, which will be 190. Actually, we're sitting at 193, so that'd be right up to 200. Basically green. Boost, there's that drawdown that we've mentioned. That's sitting on about a $14,000 gain. Right now it's sitting at 524. So we'll be pretty close. We'll have retraced about 50% of that, what is tantamount to a maximum drawdown. The crypto, new highs, and of course the platinum, when you combine all of these, and actually you get the MADSC DT and MADSC if you're interested in the Platinum. You actually get those as a bonus currently. So if you're interested in putting $100,000 in risk capital, 20% of your net worth, 10 to 20% of your net worth involved in those, you can certainly do so. So hope you guys are having a great trading week, and we'll see you in the next video.